Hey guys, welcome back to the channel. Hope you're all doing fantastic today. My name is BTC, and today I want to talk about gold chart shows why Bitcoin is the fastest horse in the race against inflation. Bitcoin's price could be weeks away from hitting 75,000. Nearly 80% of institutional investors see the appeal of digital assets. U.S. Congressman Warren Davidson says Bitcoin is a great store of value. This is Techciety. If you're enjoying the content, don't forget to like and subscribe, and do turn on the bell notification icon to find out when I post so you don't miss out. Gold chart shows why Bitcoin is the fastest horse in the race against inflation. They say hyperinflation is coming as a result of the Federal Reserve's money printer working overtime since the start of the pandemic. Investors have been increasingly looking towards gold and even Bitcoin as a hedge against monetary policy. A new chart comparing a $1 investment made in each of the two scarce assets proves why Bitcoin is the fastest horse in the race against inflation. Shortly after the halving of Bitcoin, and just as the Federal Reserve sent its money printer into high gear, news circulated that billionaire hedge fund manager Paul Tudor Jones had been buying up Bitcoin as a hedge against the coming inflation. He even went on to say that he allocated about 2% of his portfolio into the cryptocurrency. Now, Jones had earned himself quite a reputation throughout his career. As of last year, he was reported to have been worth $5.3 billion, cementing him in the Forbes 400 rich list and making him the 7th highest earning hedge fund manager. The billionaire investor is quoted as saying, "Great monetary inflation is upon us, and that the best profit maximizing strategy is to own the fastest horse. If I'm forced to forecast, my bet is it will be Bitcoin." He had compared Bitcoin to the role gold played in the 70s, referring to the Nixon era of the dollar being tied to gold. The chart below depicts gold's over 4,700% rise from $35 pre-1970 to current prices. As strong as gold's performance has been, that uptrend began nearly 50 years ago to the date. Over the last 10 years, however, gold's growth has stabilized. So according to the chart done by Willy Woo, he has made a new live chart for the gold bugs. He says $1 invested over 10.7 years. Today's value for Bitcoin would be a luxury yacht of $12.8 million, whereas gold would be $1.66 or a Snickers bar. And you can see right here on his Twitter page that it just basically like spikes up for Bitcoin from 2010. Whereas if you look at gold's performance, it's kind of gone up, it's kind of gone down, but for the most part on this kind of like level, it does seem like it hasn't wavered too much. Whereas Bitcoin, however, you could see it's just shot up. It basically mooned. So again, the article says that a $1 investment in gold in 2010 held until today would result in a 66-cent ROI, or roughly the cost of a Snickers bar. That same $1 investment in Bitcoin would have resulted in a $12,799,999 return on your investment, or roughly the cost of a luxury yacht. Now, given Bitcoin's scarce 21 million hard cap supply and a global population of 7.8 billion people, should everyone in the world seek to own some Bitcoin, there's only enough for 0.002 Bitcoin to go around equally to everyone. But wealth is not equally distributed, and there are roughly 48 million millionaires in the world. Even if just each millionaire wanted one full Bitcoin, there isn't enough to go around. I don't know how else I can say this. I don't know how more I can say this, that if you don't get into Bitcoin, you are going to miss out on the boat. This is not financial advice. This is my own opinion, but I feel that if there aren't enough millionaires in the world to fill one full Bitcoin, and right now there are only enough for 0.002 Bitcoin to go that are around equally to everyone, then the smart answer to this is that if you get into Bitcoin, you can at least be one of the ones or the 1%ers that are getting into the crypto space. So while it may be difficult to envision more upside in an asset that has grown over 1,000,000% in value, the first ever cryptocurrency is still incredibly new and more will never be created. Now you got to remember that Bitcoin is seen as a store of value. It is also very, very new, but so are a lot of things. Back in the day, we were trading with grains, and then we started trading with precious metals. Then it became paper money that were backed by precious metals. But then back in the 1970s, the US said, you know what, we're not going to have the dollar be backed by the gold standard anymore. We're just going to go off and do our own thing. The idea of money has changed fundamentally over time. So it's hard for me to say, or it's hard for anyone, I think, to say that they know the true path for Bitcoin, as it were. And it's hard to say what the true path of any currency nowadays can be. It seems like a lot of people are going less off the dollar, off the paper currency, as seen in Europe. How many people are using precious metals nowadays as tradable assets? We see them as stores of value, right? But it's not like we see, we would go to Starbucks, for example, and get a cup of coffee with that. You don't just go up to them and say, hey, I'll take one cup of coffee, and then you hand them a gold nugget. It doesn't work like that. So again, if you want to go and get into the crypto space, it is very highly advisable to do so, even though I'm not giving you advice. I'm just saying that if you look at the numbers, you can look at the data, you might want to think about doing your own research and seeing, what it could do for you. Bitcoin's price could be weeks away from hitting $75,000. The article by Francisco Memoria says that according to financial analyst and Cane Island alternative advisor Timothy Peterson, as the price of Bitcoin has been tracking its performance in 2013 almost perfectly, we could be weeks away from a massive bull run that could see the cryptocurrency's price hit $75,000. Now, this to me seems like a little bit of a stretch. I don't know if we can be weeks away from $75,000. That seems to be, I would have to see that to believe it. Okay, I don't think that that's kind of how this is going to play out. It's great to be bullish. It's great to see the future of Bitcoin as something that's going to have a lot of value. But I don't know if it's going to go up that much within weeks. Okay. But again, as the article goes on to say, in 2013, Bitcoin's price peaked at around $1,120, and as such a copycat move could see it triple its all-time high close to $20,000 in only a few weeks. Given by that metric, that's why they think that Bitcoin is weeks away from 75K. Now, on social media, various users dismiss Peterson's prediction, with one calling it irresponsible hopium being sold to his followers as nobody knows when or if Bitcoin will ever get to 75K. Others argued that the market in 2013 and the markets in 2020 are very different, as 7 years ago most Bitcoin trading happened on one trading platform and derivatives weren't widespread. The market's liquidity was significantly lower, and Mt. Gox, the dominant exchange in 2013, has even been accused of allowing the market to be manipulated before it went down. Now, if a lot of you people don't know what happened to Mt. Gox, I was not there for it either, but I heard that a lot of people kept their crypto on that exchange. The exchange went down, and a lot of people lost their funds. So one of the takeaway lessons from the Mt. Gox incident is to not keep your crypto on exchanges. You might want to put them in a hardware wallet, a cold wallet, or you might want to be able to put them somewhere that is a lot safer, where you own your own keys or other kind of storage options that is not an exchange, where you can easily lose it in an instant. This is not financial advice. Again, this is just one kind of warning that what happened in the past with Mt. Gox could happen in the future. So just be wary about that, okay? Nearly 80% of institutional investors see the appeal of digital assets. Now, this article goes on to say that a survey of 800 institutions found that nearly 80% of institutional investors see the appeal of digital assets. More than a third of such investors have already invested in the market, and the survey found derivatives exposure has also increased substantially compared to 2019. The overwhelming majority of investors are interested in digital assets, a survey conducted by asset manager giant Fidelity had found, and in the survey, covering nearly 800 investors in the US and Europe, found that nearly 80% of institutional investors found something appealing about the nascent asset class. It also found that more than a third of such investors have already directly or indirectly invested in the market. They conducted a survey in 2019 of November to early March 2020, ending just before the economic and health crisis gripped global markets. So they were saying that it confirmed what a lot of macro investors were thinking. And compared to 2019, the portion of US investors who still hold digital assets increased from 22% in 2019 to 27% this year. Still, there are a number of obstacles institutions face in investing in the market, including price volatility, the lack of fundamentals to gauge appropriate value, and market manipulation. Pretorius said that the current macro-driven interest in Bitcoin could be short-lived unless service providers offer the necessary tools to overcome those barriers. Crypto-native firms like BitGo and Genesis Global Trading recently announced new prime services to help investors navigate the market. For its part, Fidelity Digital Assets offers execution and custody services for professional investors. More investors have taken on exposure to derivatives, according to the survey. The percentage of U.S. investors with exposure to cryptocurrency futures increased from 9% in 2019 to 22% in 2020. Now you can see right over here in this chart that it pretty much just skyrockets when it comes to the U.S. investors with direct investment in digital assets. Now, this is the kind of space that this is the kind of growth that it's great to see in this space from last year to now, just in 1 year alone, right? Now, the article also, or rather the findings also show that a lot of the institutional investors are choosing cryptocurrencies, and that a lot of Europe actually is more interested in crypto. They were saying that the respondents from Europe in 2020 survey displayed even higher results. 45% of them noted that they had allocated a portion of their investment portfolios in digital assets, and they concluded that Europe is perhaps more supportive and accommodating. It says that it could just be things going on in Europe right now, that you get negative interest rates in many countries. Bitcoin may look attractive because there are other assets that are paying return. Negative rates across numerous European countries are indeed an increasing trend, just like what's happening here in America. Negative interest rates are going to be hitting, or have already hit, U.S. bank accounts, and they're starting to see that, hey, if we get into crypto where one Bitcoin is one Bitcoin, then we don't have to worry about those kind of rates saying, look, just storing your money is you're basically paying to do. And nobody wants to do that, right? You want the whole idea of having a savings account is so that you can gain interest and say, hey, I'm going to be saving my money and I just want to grow. And that's how it should be, right? But with negative interest rates, that can't really happen. So rather unexpectedly, over 25% of participants hold the largest cryptocurrency by market cap, Bitcoin. The second seeded coin, Ethereum, takes the second spot with 11%. And in Bitcoin's case, the numbers from the 2020 poll have increased substantially compared to the 2019 results. And this is despite Bitcoin plunging to below $4,000 in March. It's outperforming most traditional financial assets, and Bitcoin entered the year at 7,200 and is currently trading at 9,700, charting year-to-date gains of nearly 35%. U.S. Congressman Warren Davidson says Bitcoin is a great store of value. Recently, Warren Earl Davidson, who is the member of the United States House of Representatives from Ohio's 8th Congressional District, spoke to journalist podcaster Laura Shin in episode 176 of the Unchained podcast, released on June 9th, about a wide range of topics of interest to the crypto community. If you're not from Ohio but you may have heard about Congressman Davidson before, it's probably because of what he did back in 2018 of December. So back then, the article was saying that he introduced a bipartisan bill, Token Taxonomy Act of 2018, in order to provide light touch regulatory certainty for businesses, entrepreneurs, and regulators in the blockchain economy. That bill is the product of months-long collaboration following the bipartisan roundtable hosted on September 25th of September 2018 in DC, and how cryptocurrency should be regulated. As Crypto Globe previously reported, this was attended by around 50 representatives from Wall Street, venture capital firms, and the crypto industry. It was there that the Congressman Darren Soto, Ted Budd, and Tom Emmer united in a commitment with other panel participants and stakeholders to provide the legislative certainty innovation needs to flourish in the US. Now, when they asked how he got into Bitcoin, Davidson, who owned a group of manufacturing companies before he became a congressman, said, "Look, I took an interest in Bitcoin early on, because in manufacturing, we had a lot of international payments and, it had all the payment system problems that people recognize. And so you would wire transfer money, and early on it was really clunky because you couldn't wire directly to China, for example. So you'd go through Hong Kong. It was very inefficient. And that led to an interest in things like DigiCash and other things. So when Bitcoin came on the scene, you say, oh, this really is a pretty elegant solution, pretty neat idea. And the modern monetary theory people believe that if you have a central bank, you can just keep printing money. That's not what history shows, and frankly, the logic of it is that you can dilute the value of everyone's money and there's no consequence for it, and that's completely irrational. So people in the crypto space, and obviously the Bitcoin fans, will see the fallacious argument for what it is. But I think if you had Bitcoin as your national currency, you would see the lack of flexibility that it would provide for a central bank in a situation like this. He views Bitcoin personally kind of like digital gold versus a true currency, and I think it's a great store of value. I don't own any personally. I think given the role and how vocal I have been as a legislator about the crypto space, that it would be inappropriate for me to do so, though not technically a violation of the rules. So this is someone who is a congressman, someone in government who already has a role, and he is very pro Bitcoin and cryptocurrencies. It's these kind of people that not only do we need in government saying, hey, we need to adopt this as soon as possible, but more are coming. Just like Jonathan Herzog, like I spoke about earlier. There's more and more people getting into the space in government that understand the fundamental values of what Bitcoin and other cryptocurrencies are bringing to the table. And I think this is a fantastic way for the crypto space to get mass adoption, because that's really what we need, is mass adoption. Once they understand that it's not scary, it's not for everybody that's going to do any kind of illegal or illicit activities, that is really a transparent type of currency that everybody can benefit from, then I think this is like a good path forward for everybody to not only succeed, but to do well in the future. So this is great news. Good on Congressman Warren Davidson, and hopefully they keep it up in Washington, D.C. I think that's going to do it for me today. I hope you enjoyed the latest happenings in the crypto space. Don't forget to leave a comment to keep the conversation going. My name is BDA, and until next time, stay bullish.